Okay, so let's start control accounts. So control accounts, the main concept behind control accounts is to determine whether our individual debtors and creditors accounts are error free. You know, in sales ledger we have all our customers accounts, all our also known as debtors accounts, right? So in sales ledger, oh, in sales ledger we have our customers accounts or credit customers accounts. Okay, or they're also known as what? Credit customers are also known as your debtors, right? They are also called your, like, they are also your current assets, right? So all these things, all of these are linked, you know, they're the same thing. Then we have purchase ledger, which lists all our suppliers, actually credit suppliers, right? And they are also known as creditors because we will be paying them money, creditors, and they are also our current liabilities. Okay, now what is the concept of control accounts? Control accounts are basically the total of all the debtors. So sales ledger control account will be the total of all the debtors. Purchase ledger control account will be a combined account of all the debtors for sales ledger control account. Purchase ledger control account will be the combined account of all the creditors. Okay, it will come clear in a while how it works. Okay, so whenever you sell something, okay, you sold something, now where would you record it first? In your books of prime entry, right? So whenever I sell something, it will be recorded in my sales journal, sales journal, okay? What is a sales journal? It's just a list of, so let's say I sold my, this is my customer X, I sold him goods worth 1,000. I'm just making these up. Then we have Y. I guess I sold, let's say I sold him 5,000 worth of goods. And then we have Z. I sold him 10,000 worth of goods. From the sales journal, where do we put the account, or where do we put the entries in the individual? So in the sales ledger, okay. In the sales ledger, we have X with this 1,000, and then we have Y 5,000, and then we have Z 10,000, right? It's 10,000, let's just say. Now, we know that this would go shelter, and then there will be a combined entry in your nominal ledger, in your nominal ledger, uh, in your sales account, the combined, total for the month, right? 10, 16. It's just a recap, just a revision. But then we'll come to the point of control accounts. So here we have 16,000. The details would be total for the month, total credit sales for the month, right? So this is the double entry, the credit here and debit in the individual accounts, right? Now in your sales ledger control account, this is not really relevant. It's not too relevant. Now, how do we prepare sales ledger control account? What did I say at the start? The sales ledger control account is basically combined account of all your customers or all your sales ledger accounts. It's a combined account. Okay. So what would you write here? You write credit sales. Since it's combined, it will be 1,000, 5,000, 10,000. But remember one thing. What is the source of sales ledger control account? What is the source? We will use journal. Why would we use journal? I'll explain it to you. So from the journal, we'll take 16,000 since this is our sales credit sales. Remember, only the credit sales will appear in your sales ledger control account. Okay. Why do we take the information from the books of prime entry to prepare our control accounts? Why is that? Because the purpose of control accounts is to identify if our ledger accounts are error free. Okay. Now, if I had taken, now let's say while copying this from journal to my ledger accounts, I made a mistake. Instead of writing 5,000, let's say I wrote here 4,000. Okay. Now I'll prepare my sales ledger control account from this value. And at the end, after balancing, I will compare all the individual sales ledger control account. I'll total all of them and check if they match 1600. Understand? So I would take the information for sales ledger control account from the journals. All right. It's a bit of a confusing concept to understand, I guess, but you have to read your book and then hopefully you'll understand. Anyways, you have to remember one thing: sales ledger control account is the combined account of all your customers or debtors. Okay, so when you make a sale, sales account is credit and your customer account is debit. So, but the difference is it's combined. Okay, now when your customer makes a payment, okay, wait. Now, when your customer makes a payment, where does it go? To the cash book, right? Cash book is what? Book of prime entry, right? So let's say X made us a payment, Y made us a payment, Z made us a payment in your cash book. So this is your cash book. X, Y, Z, all of them made a payment. He paid us 1,000. X paid us all whole amount. He paid us 4,000, and this guy paid us 5,000. So the total money we received is about 10,000. Yes, actually 10,000, not about 10,000. So there, this would be 10,000. X is cleared. Y paid us 4,000. Z paid us 5,000. Now in our sales ledger control account, remember it's a combined, and the source document is what? Source document is your journals, books of prime entry. Sorry, not the journals only. Cash book's a book of prime entry, right? So from your book of prime entry, how much is paid this year? 10,000. So combined 10,000 was paid coming from bank. This is your sales ledger control account. Just in this way, like all the individual entries will be. So when in an individual's account, when there's a bad debt, when there's a discount allowed, it comes here, right? As an individual, think about like sales ledger control account, the entries, the debit and credit is as same as you would do in your individual debtors accounts. It's like your total, okay, it's also known as total trade receivables account. This thing is also known as total trade receivables account because these are your credit customers. Okay, total trade receivables, it's your asset, it's your current asset. Now this tells us what are the uses of sales ledger control account. It reduces fraud. How does it reduce fraud? Because sales ledgers are made by a separate person, sales ledger control accounts are made by a separate person. So if both, so sales ledger account, these were made from here. Let's say there's a mistake or there's a fraud in this one. We won't be preparing our accounts from here because then it will carry on the fraud. We will prepare our account from the original entry, from the original recording. Then we will compare our total with the individuals. We'll add up the individual. Let's see if it matches our total or not. So basically, it reduces fraud because they are produced by an individual person. Okay, it acts as a check. Also, it shows us total trade receivables. As a sales in purchase ledger control account, it shows us total trade payables. Okay, and there were a couple of more advantages, and yeah, a couple of more advantages you can look from the book. A couple of more uses, right? Okay, then I'll move on. I hope you understood the concept. I think this is one of the best ways to teach you this. There's no better way to do it. Okay, so sales ledger control account contains this information. There's a balance brought down on a debit side or a balance brought down on a credit side. Okay, so this is another one of a concept which you have to understand. Now we know that sales ledger control account is also known as what? Total trade receivables account. What is it? Total trade receivables. This is your current asset. It should have a debit balance, but why does it also have a credit balance? Think about that. Now, usually it has a debit balance. It should have a debit balance, okay, over here. It should have a debit balance, but sometimes our customer might have overpaid. Okay, now once customer has overpaid by mistake, we owe him that amount, right? He has paid us more than necessary. He hasn't bought the goods, but he has paid us. He's paid us more than needed. It means we owe him. It has a liability, right? And there are more scenarios where there'll be credit. Now there could be an overpayment. There could be a payment in advance. So it could be by mistake that customer is paid by us or more than required. It could be a payment in advance, right? So let's say he paid us this month at the start, in this month, and he said, actually wait, he paid us last month, and he said, whenever I buy, just keep deducting my money. So he paid us an extra 1,000 just for nothing, for future purchases. So that's how we'll have a credit balance, even though it's our total trade receivables account, and even though he's our customer, a credit customer, but he has paid in advance. Once you read the chapter, I hope it becomes clear. And there will always be a debit balance. Sometimes there will also be a credit balance. Actually, usually there is a credit balance, but this is the more common thing. This definitely has to be there, a debit balance. Then credit sales are debited and in the sales account. Just like an individual customer, when you sell to a customer, you make a sale, a credit sale, what happens? Your trade receivable increase. Your trade receivable are increasing, right? Now, whenever he pays an amount, your trade receivables are decreasing because he has paid it. Now you won't receive it anymore. Discount allowed is always with the bank. And another way to think about it is you won't receive this amount anymore. It's not your trade receivable anymore. Sales returns. He bought some goods, it's your receivable. He returned the goods, you won't receive that amount anymore. Bad debts, you won't receive that amount anymore since it's a trade receivable account. Okay, so there's a contra entry. I will teach you this one later. This day I will come to this later, but right now just focus on the other things. So next is bank dishonor check. Now first he paid us the amount we want. Now the bank has refused. It means again this is our trade receivable. We'll give it back to him. He'll say now give us the rest of the money. Refunds to trade receivable. It's like an opposite entry. From the bank account it's credited. So here it would be debit, right? Refunds to trade receivables. Now, if there was an over allowment, if we charged more than necessary, we would record it here, more than necessary. Okay, since you see balance BD was a credit balance. And like the best way to think about it is since bank or cash will be credit, this is debit, of course, because it's a refund. Okay, all right. And yeah, interest charged on overdue accounts. This is also your what? It's your receivable. It will increase your trade receivable. Okay. Now he owes us this amount. Interest charge on overdue accounts. He hasn't paid in a while. We'll charge him an interest for that. Okay. And these are the balances of your ledger accounts. These will be given in the question. Balance CD and balance BD. Like the balance carry down will be usually given. So this is everything you need to know. All the entries you need to know about sales ledger control account. Okay. And then we have purchase ledger control account. It's quite the opposite. Just like a supplier's account. Okay, an individual supplier. Whenever you buy something, it's your uh, trade payables, total trade payables. All right, total trade payables. It's your current liability. Okay, and try to understand these. I hope you understand. If you don't, I'll help you out with these. Now, another extremely important concept. Um, wait, okay. Another very important concept of contra entries in ledger accounts. Now, okay, let me give you an example. There's a person A. We buy from this guy and we also sell to this guy. Okay. Now let's say we sold him. He's our trade receivable. We sold him worth of 500. We sold him goods worth how much? 500. And we bought from him, from A, the same person, we bought from him goods worth 1000. Now we bought from him 500. We sold him, sorry, we sold him, it's our trade receivable. We sold him 500 and we have to pay him 1000. He has to pay us 500, we have to pay him 1000. Okay, let's say we both are trading. You are A. I sold you goods worth 500. You will give me 500. I will give you 1000. Does it make sense? Why don't I just give you 500? So there's something called contra entry which cancels out when a business is involved in buying and selling with a same business or with one particular business. The entries can be cancelled out using contra entry. The amounts can be cancelled out. So my trade receivable, my sales ledger control account will be credit by 500. My purchase ledger control account will be debit by 500. What it does is it cancels out the amount. Okay, so this will be uh, purchase ledger control account. In the bracket, you could write contra, and where is this coming from? This is coming from sales ledger control account contra. Now it cancels out. Now what happens? This account is closed. You won't pay me 500. Why should you pay? Because I bought goods worth 1000 from you. I should pay you 500. Now let's see what is the final balance. When we balance this, you will get 500 over here. It means this is my liability. Okay, you are cleared. I'll just give you this money and that's it. We are done. Now, whenever there's a contra entry, this is standard. You can actually memorize this, but also you have to understand it. So in sales ledger control account, whenever there's a contra, when there's a set off, when you are involved in buying and selling with the same business, you would write credit your sales ledger control account by that amount. It will be in the question, and debit your purchase ledger control account by that amount. Set off. Yeah, you can write set off in the bracket. You can transfer to purchase ledger. Okay. So yeah. So I sold you some good, and I can buy some good in return. I hope you understand. You can read this a couple of times from the book and you'll get it. Okay, next is the source documents. At the beginning, I told you that we make up our control account from the books of prime entry. Don't forget this. We make our control account from the books of prime entry because if we take them from sales ledgers, there won't be any use of making the sales control account. Okay, if you go back, I've explained you why it could save us from fraud. The reason is actually because we are preparing it from our, wait, let me go up. The reason is because, one second. Yeah, we are taking the amount from our sales journal and directly we are making this. One person made this, we are making this. Now, if there's something wrong with here, it will be identified with here because it's made by different people. Okay, if this guy was doing a fraud while making these accounts, we will like redo his work and then we'll compare them. Okay, we'll compare them. So the basic idea is you have to prepare say control accounts. If it's a sales ledger control account, then from particular. So if it's a sales, okay, this is supposed to be for sales ledger control account, and this is supposed to be for purchase ledger control account. For sales ledger control account, you have opening balance. When we'll do a question, I hope I think you will have a better idea. For credit sales, you use sales journal. Okay, in your book, it's supposed to be like this, not sales day book. It's sales journal in your syllabus. Sales return journal. Cash received, cash book, ca cash book, and bad debts don't belong to anything else, so they'll be general journal are also known as journal. In your book, it's written general journal, and in real life you can call them event journal. Dishonored checks, cash book. So it's extremely simple, Set off, it doesn't have any link with anything else, journal. Interest charge, journal. So anything, and these entries I will explain you while doing the question. Okay, while doing the question I'll explain you these. So go ahead and try to read these, and then read your book also. Okay, I hope it was clear and understandable.